It's May 2024, and we are still talking about Sam Bankman-Fried, also known as SBF, and FTX, the failed cryptocurrency exchange that set the world on fire in November 2022 when it went bankrupt, losing billions, owing $11.2 billion to be exact. However, this time the story is a slightly positive one. Almost all FTX customers will receive their money back. It was thought they'd never see it again. Before we jump into details of the recent good news, let's recap the troubled history of SBF and FTX. FTX is a cryptocurrency exchange that was founded in 2019. For those that don't know, that means they allowed anyone to trade crypto, like Bitcoin, Ethereum, even Dogecoin, a meme cryptocurrency that somehow has relevancy with backing from Elon Musk. The platform was thought to be intuitive enough that everyday traders could use it, kind of like Robinhood is for trading stocks. But it was also powerful enough for professional firms to use it. Even hedge funds that spent billions and billions trading used it. FTX rose to immense popularity with enormous amounts of success. I mean, enormous. At its peak, SBF was a billionaire, leading the third biggest cryptocurrency exchange, valued at $32 billion with over 1 million users. They were so popular that FTX won the naming rights to the Miami Heat Stadium. For a long time, the Miami Heat played at the FTX Arena. Then in November 2022, all hell broke loose when CoinDesk, a medium-sized media company focused in the crypto space, wrote a report that caused people to look into FTX's balance sheet, what assets they had, what liabilities, etc. People found that FTT, a cryptocurrency coin created by FTX, was a major asset for the firm. This isn't really a problem until it is. What I mean by this is that as long as the value of the FTT coin remains high, the value of FTX's assets will remain high. However, Binance, another cryptocurrency exchange, sold all of its FTT very quickly, which dropped the price of FTT and led to FTX having substantially lower asset value. The assets of FTX is how it will be able to pay back its customers. With customers fearful, they began to try and pull out all of their money. Customers attempted to pull billions of funds out of FTX, but FTX didn't have the liquid cash to provide them. They may have had other assets worth the billions people tried to take out, but at the time, they didn't have billions in easily movable cash. This will be important to remember as we jump to today. All this led to FTX going bankrupt. It was revealed that FTX owed $9 billion, but only had $900 million in quote-unquote liquid cash. Investigations also revealed lots of crime by SBF and his co-conspirators that wound them all in jail. But we won't get into this now. I did discuss this in more depth in 2 other episodes of UNinvested. If you're a little confused, a quick analogy may help. Imagine that if you put money in a savings account and the bank decided to invest that money into stocks and a house. The stock is super easy to trade and you can convert it into cash easy, but a house, not so much. Now imagine that the stock's price crashed and it is worth way less when the bank bought it. At the same time, everyone tries to take out money from their savings account. The bank simply can't give everyone their money back because that stock is not worth enough and they can't sell the house. As I'm sure you guessed, the bank is FTX, the stock is the FTT coin, the house is all other FTX assets, and the savings deposits are the money customers put into FTX. Now, as you look at the present day, there is a happy ending after all, because 98% of customers that put money into FTX, or the savings deposit in the previous analogy, will get 118% of what they originally put in. The 2% of people who won't get paid back the 118% are those that had claims were owed over $50,000. Now, the 118% may sound like a great deal for people, but in reality, customers still lose. The 118% does not come close to making people whole when you consider the money the customers could have made in the time since they lost their funds and crypto in November 2022. Back then, at the time of bankruptcy, one Bitcoin was worth $16,080. Today, one Bitcoin hovers around $62,000. That's about a 290% loss for customers. And you're probably wondering how FTX is suddenly able to pay customers after filing for bankruptcy. Well, that's because FTX was finally able to sell their house. And by house, I mean all their other assets to free up roughly 14 to 16 billion in liquid cash. The appreciation in cryptocurrencies helped FTX, as their other crypto investments have raised in price substantially, along with a few other notable investments, including a stake in Anthropic AI, which is the OpenAI competitor that produced Claude to rival ChatGPT. That stake in Anthropic AI is worth almost $1 billion now. While this ending could be looked at as happy or sad, the FTX scandal still rings in the finance world today. Quick side note, the CEO of Binance, the company that started all of this, also went to jail earlier this month. Despite all of this, the crypto industry is still thriving. Maybe it took taking out the bad eggs to move to a better future. In the meantime, I'm Sahil, and thank you for listening to UNinvested. I'll be back for the next episode on every other Thursday at 6 p.m. Peace. This is a personal video. Any views or opinions represented in this video are personal and do not represent those of people, institutions, or organizations we may or may not be associated with in a professional or personal capacity. The views expressed are for entertainment purposes only and not to be misinterpreted as actionable investment advice.